A very good morning and a happy Thursday to you. Welcome to today's episode of Morning Wealth. Three things we will talk about. Democrats take control of the Senate. NYSE China ADR Delisting. Alibaba and Tencent in the list now. And lastly, FX Roundup. A wild day in the markets got even wilder as the session wore on. In fact, in the morning today, when I was reading the headlines, I was not able to believe myself. Am I reading the right news? And turned on the TV to see some of the images. It was stunning. I could have never imagined that these things can happen in the US. Back to how it impacted the stock market. Stocks, particularly cyclical ones, surged in the morning trading after it appeared likely that both Senate races in Georgia would go to Democratic challengers, giving President-elect Joe Biden a slim majority in Congress. The clinching seat actually wasn't called by news networks until the trading ended. Investors seem to have taken a liking to a unified government now. So from the blue wave, from a divided government to now investors like anything that's on the table kind of situation. Most speculative tech stocks, which tend to benefit from monetary rather than fiscal stimulus lag. The Dow Jones surged more than 600 points by early afternoon, and the yield on the 10-year treasuries rose above 1%. Then things took a dark turn as a rally in Washington of Trump's protesters turned into a mob that attacked the US Capitol. Incredibly, the Dow still ended in sharply positive territory, rising almost 438 points or 1.44%, led by shares of banks and manufacturers that have been beaten down during the pandemic. The yield on the 10-year Treasury note soared above 1% for the first time since March as investors dumped government bonds in anticipation of more government borrowing and higher growth and inflation. Meanwhile, gold fell 2.3%, the biggest one-day loss since early November as investors retreated from the haven asset. The tech-heavy Nasdaq Composite, which was in the green for a while during the day, ended 0.61% lower. Worries about the pressure on big tech stocks appeared to ease as the day progressed, as some investors and analysts saying they don't expect policy changes to be imminent. Even if Democrats take control of both the Senate seats in Georgia, some said moderate-leaning Democrats may act as a check on more progressive agenda. Companies like Goldman Sachs and Caterpillar jumped 5%. The Russell 2000, which is the index of small-cap stocks, surged 4%. The S&P 500 ended up higher by 0.6%. Big tech stocks, including Apple, Microsoft, and Amazon, declined more than 2%. On the China ADR delisting drama, the NYSE will proceed with delisting China Mobile, China Telecom, and China Unicom, its second about face this week, after Steven Mnuchin criticized its shock decision to give the companies a reprieve. The stocks can't be purchased starting from January 11 and must be fully divested by November when related transactions will be frozen, is what the Treasury said separately. All the three ADRs were down. From delisting to blacklisting, the US is considering adding Alibaba and Tencent to a list of Chinese companies in which Americans are prohibited from investing. The Department of Defense, State and Treasury have debated whether such a move could have wide capital market ramifications. Apparently, no decision has been made yet. On oil news, oil paired gains late in the session as what happened in Washington overshadowed shrinking US crude inventories and Saudi Arabia's planned output cut. Interestingly, domestic stockpiles fell by about 8.01 million barrels last week, the most since August, and US imports of Saudi crude plunged to zero for the first time in 35 years. This is according to EIA data. The report also showed increases in both gasoline and distillate stockpiles and declining fuel consumption. Lastly, on the FX front, although the Japanese yen and Swiss franc crosses performed very well today, the US dollar was mixed. Dollar yen and dollar CHF broke to the upside, but the greenback ended the day lower against Australian and New Zealand dollars, flat against euro and the Canadian dollar, and marginally higher versus the sterling. US data had very little impact on the greenback. ADP reported job losses. Market PMIs were revised lower, but factory orders rose more than expected. Also, according to the FOMC minutes, some members saw the potential need for future adjustments to the asset purchases. This assessment reinforces the central bank's dovish outlook and their plans to keep interest rates unchanged for the foreseeable future. Quick note on the dollar-yen movement. It's very linked to the US 10-year yields. With the yields going up, that is the reason why we got a little bit of an uptick on the dollar-yen. So the yield situation will define a lot of what happens to the dollar-yen, and that's something that we will watch out for. That's the update. Stay safe and healthy, and I'll speak to you tomorrow.